morning, everybody. Let's get D&D on. Let's check how I look. So we're all good. Let's check how I look. So we're all good. Okay, perfect. Right, so laptop not working again. I charged it the whole night and somehow it still doesn't want to work. So let us get back into the markets. It's currently the London Open. So we are going to quickly analyze the market. So yesterday we took a trade. Unfortunately, the pip calculator I had gave me the wrong values. We did catch a 1 to 6. And, excuse me, I didn't make the amount I was meant to make, which is unfortunate because it was a successful trade. And unfortunately, we didn't get the correct lot size, so we didn't get the correct amount of money. But the principle is fine. I'll just see it as a break-even day. So the past 2 days we've had a bit break-even. Monday, Tuesday, excuse me, were losses. So we are on Thursday now, and I believe there's news. Let's go to Forex Factory. Excuse me. So today is should be the 11th, 12th of June. Wait, what? It's Friday. Oh, it's Friday today. Okay, it's Friday today. Okay, cool. So we had bearishness on GBP news, and we have some kind of orange news on USD. That lines up with the sell ideas that we have here. So if we look at the daily time frame over here, you can see with this hourly fair value gap, if I drag it across, oopsie, we don't do that. Drag, it's clicking on the wrong one. If I drag it out just so the words are to the side, you can see, right, the price took out. Okay, I'm going to need to grab an arrow here. Let's look at the top of the arrow. That's where the pointer is, so the top point. So you can see price started down here, went up, came down, went up, came down, went up. But in this coming down, it had the displacement you can see with that fair value gap, and it traded below this swing low right here. So that is a sign of bearishness. You'll also notice when price came back to this hourly fair value gap, we've had multiple rejections plus negative news. It does line up for a continuation idea, at least, right? Bear in mind that this is the daily time frames. This is us reading it from a daily perspective. So if we take that daily idea into the lower time frames, and we've just had the hourly or the London Open, we can then now see in greater detail what we're looking for. So, which is a way to kind of hide that. So we have price trading up, right? Create a swing low down here, extreme up here, swing low down here, failed to create a higher high. So this is it, filling out the fair value gap. Failed to create a low low, but also failed to create a high high. Then price displaced downwards, taking out all the sell side liquidity and also taking out all of the swing lows. Then price pushed back up into this hourly fair value gap. So it could go back down. Now, you have to be kind of careful because price did take out the sell side. Whenever you take out sell side, price goes to buy side, generally speaking. So it is a careful trade, but I would be bearish because of the daily context. So if we zoom in even more, right? So you can see this is the 15-minute time frame. We are creating these high highs and high lows, right? Price has taken out this swing low right here. Price could take out this one, but if you're aggressive, you can wait for price to just take out this one. And you can see here, this is displacement. So you'll just wait for price to pull back into one of the fair value gaps, probably the one that lines up with the optimal trade entry. And you can get an aggressive trade with a high risk reward ratio, but obviously a weaker trade. But if you wait and you're patient, you can maybe wait for price to take out this swing low down here. And once it takes that out, then you look for the retracement. Just extra confirmation. So I can enter both because when you have the daily context, it allows you. If I didn't have the daily context, I would not be trading this aggressively, because when you have the daily context in your favor, a lot of the time price doesn't always come back to your area that you want to trade at before it delivers. So a lot of the time I may enter in early when I have the daily bias. Now, how would I know if my daily bias is correct? Well, you don't, but you have experience on your side. Experience and back testing. Those are the two factors that allow you to know whether or not your daily bias is likely to be correct. The truth is you can never fully know, but what you can do is have a pretty good idea. For example, you have a pretty good idea about your journey tomorrow. You don't exactly know what's going to happen. You don't know if the traffic light is going to stop working. You don't know if there's going to be a road work. If you don't know if there's going to be a diversion, but you have a pretty good idea. Now, most times you're correct. If you think about your journey to work or school, whatever it is, most of the time you're going to be pretty much bang on about how your journey is going to go. For the most part, that's what daily bias is like. It's predicting through experience, through the signs, through information and skills, what's going to happen tomorrow and what's going to happen for the rest of the day. What is price conveying? What is price showing? What is price telling us it wants to do? And you kind of have to infer that based on strategy. Also, just to note, I cannot see chat. Okay, so if there is conversations or questions, I will not be able to see it. Let me actually open a tab. I'll be flicking back and forth. Let me actually let me mute this. Okay. Wait, where will chat be though? Maybe here. That's fine. We'll just rock with this. So on this idea with the kind of philosophy we have, we'll be looking for price to pull back into one of these areas and then drop down. Now, we don't just want price to pull up to this area. We'll have to pull up to something of value. So I see an order block right here. I'm going to mark the bottom of it with a horizontal ray. And that will be the lowest hanging fruit. You could also zoom in and look for fair value gap a little bit deeper in. I personally like to aim for the highest time frame, highest zone when I'm looking for sales. So obviously this is a 50-minute time frame. I see a fair value gap, and I also see that fair value gap lines up with the order block. So this is the fair value gap I'm seeing. And then the order block is that red arrow. So I'll be looking for price to come up to the, you could either wait for the order block or you can wait for the fair value gap. It doesn't really matter. It's like a couple of pips different anyway. And you want to set it above. So the order block is all the way up here, which is about this many pips. And you want to add maybe a couple of pips for spread and whatnot. So if price comes up here, that will be our entry. And what will be our target? Well, we'll be targeting, well, we're expecting price to create a lower low, but we will be targeting the previous low, which is this low right here. And that needs to change to green. And we'll drag this down. That will be our low hanging fruit target. And then, of course, you would expect price to create a low low. And we'll need a daily target, which is all the way down here. Will it achieve all of this in one day? Probably not. But that is our overall target. And we'll be taking some partials at the 1 to 5, which I'm very happy with. Anything above a 1 to 2 is something I'm pleased with. So this is a trade that is going with the bias and it's fairly aggressive. So I wouldn't risk my maximum for this, maybe like 70% of my normal risk. So I'm going to set a sell limit. So I'm going to hide my screen really quickly. Just hide my screen so I can go on my MetaTrader 4 and enter on my account. Now, I don't mind showing you the value of the balance of this account, but I do mind showing potential leaks on it, like my personal information. So that's why I'm hiding. So that's GJ. Yeah, we need to find another website that gives us better accuracy in calculating pips. Because the one I entered last time didn't work. It gave us the wrong value, which led to us only making a small amount yesterday when I could have made a lot. Okay, so stop loss is 17 pips. What am I looking for again? GJ, right? So that'll be 80, so divide that by 4. No, this one doesn't want to work. Okay. I mean, I can show you this part, I guess. Hold on. What? This is actually 80. So okay. Four 806. Okay. That's been placed. Let's go back. Right, so GJ, this is a sell limit. Let me just post this. Perfect. Right, so that's GBP, JPY done. Can keep that there. That's the first trade we've analyzed. Okay, NZD CAD. This one looks like it's changed direction. Have a look at the daily. On the daily, you can see that we're overall bullish. And we do have some imbalances that we could aim for on the daily time frame, such as this imbalance right here, which would be the target. And then going down a tad, we've broken structure over here from this low to this high. And we can see that there's an order block right there, which would be a nice place to enter, all the way over here. And then, of course, the overall target on the daily time frame would be over here. So this is kind of the shape we're looking for. This cannot be high interest because it just seems like such a long way from happening. So we're going to put that in medium interest. Let's have a look at Euro NZD. So Euro NZD, we are pretty bearish, but we've taken these buy side liquidity, which we saw yesterday happening. We drew out these equal highs. You can see with the green line. Equal high, equal high, equal high. We knew price was going for that. So now price has taken it. It's traded below the swing low, and it's come up to this fair value gap. So let's see where we are in terms of the fib. So in terms of the fib, we're at the halfway point. So there is a decision to make, because to be fair, this is the only fair value gap of value, in my opinion, at least on a 2-hour time frame. And then if we zoom in a little bit more, we failed to create a high. Looks like we're about to trade below this swing low right here. And then what I would expect for price to do is to trade below this, pull up to our entry, and then trade that to equal lows, potentially even further down. So just to clarify, on the daily time frame, this is a 4-hour, but daily time frame, we swept buy side liquidity. Okay. After we swept buy side liquidity, we displaced back into the range quickly. We didn't stay above those buy side for a long time, so it's not a confirmation of price going higher. We then have displacement, price pulling back into that displacement, right, on our 2-hour time frame. On the hourly is actually preferred, in my opinion. And then we zoom in even further, we see price trading below swing lows. Now, there's two things we can do. Number one, we can enter now, right, based on the hourly time frame. What does that mean? That means we're going to have an hourly stop loss, which would be something like this. And I'm not a fan of that risk-reward ratio being 1.76. So we have one idea of price going down, but how do we increase the risk-reward ratio? Let me show you. So that was if we were to get in based on like the hourly, because we are just entering in a touch. And in truth, based on my strategy, it would be, as soon as it enters the fruit, it'll be above that previous high, which the first candlestick contributing to the fair value gap. And I'll be targeting previous low. So that should be this, which is obviously not ideal. So although we believe price is going down, we don't want to enter lower than the 1 to 2 risk-reward ratio. So what is the best thing? So with this red arrow, it will give us opportunity to enter on a lower lot size. How is that the case? Well, we just look for the same strategy on a higher time frame, bar the liquidity sweep. We've already had a liquidity sweep, so we no longer look for that. But you can see following the liquidity sweep, price displaced downwards, taking our market structure, displacing, and in that displacing range, we look for a return to a premium, which is 0.5 and above the dealing range. And as you can see on the hourly, we displace downwards, we pull back, and that faint blue horizontal line is the line that represents the equilibrium, which is above that is premium, which is where you want to be selling from. So price tagged above it, that would be your entry, and you'll be selling to the equal low. So we're going to look for exactly that, but on a smaller time frame. So we go to 5 minute. What do we have? Well, price failed to create a high, which is good. We're trading below some swing lows, but I want it to trade below the one that I've highlighted, which is that green line. At the very minimum, I'll be looking for this, but only if price displaces taking this out. But ideally over here, I want price to trade below this. And then once it trades below this, I would expect price to, as you can see with the red line, pull back. When it pulls back into the optimal trade entry, we can enter from there, sell into the same area we would have targeted if we entered an hourly. So then our risk-reward ratio will look something like, as an example, okay, let me delete that, that's just gone wonky. The sales stop was around like here. This is the entry was about here. Same idea, same target at that 1981 level. As a 1 to 6. So it's the same idea, but with a bit more patience, a bit more waiting, we will then see the ability for price to actually give us a better entry. So in that regard, my laptop just turned on. In that regard, it's just a factor of patience. Could we get in earlier? Well, we have to zoom in a little bit more. I would say we could, but let's not. Remember, you need price to displace. What does that mean? That you need price to displace, to take out the swing low. You can't just take out the swing low lethargically. You've got to see a movement, strong movement. So I should be waiting for price to move quite fast. Okay, my laptop is on. How much battery is charged? Not enough. Okay, we'll just keep that charging. Okay, so let me try set an alert at 198608. Okay, NZD CAD. Let's have a look. Oh yeah, we've done this already. We're looking for that pullback. The CAD JPY didn't pull back up. AD NZD. Again, didn't come to the area we're looking for. To be fair, it didn't. On the 2 hourly, it kind of did though, because that would have been it right here, and we did touch that. What about the 4 hourly? Right. Boom, boom, boom. Expecting. See, price has given us a kind of an entry, but it hasn't touched the area, so we could not enter this. How so? Well, we had this swing low over here, and it got taken out by displacement, and we now have a retracement up into that upper echelon of the displacer leg. So around here would be the optimal trade entry, which is where price came up to, and now it looks like it potentially wants to go down. But because it didn't touch the zone we were looking for, we cannot enter this, based on my personal strategy. Shape is good, execution is not. So this one, I was waiting for price to come back down. You can see here we tried to get in twice, but we missed both opportunities, which is unfortunate. The first one we drew was this order block. This happened at a time where I was not available to enter the markets. Price came down to this 2 hour order block, midway point. I would have had a sell limit and a stop loss just below it. Price came up, and I was targeting these equal highs over here. Then price created this fair value gap, and I wanted the price to come back down. And again, at 2 a.m., 3 a.m., I wasn't awake. So when price came back up, unfortunately, we couldn't capitalize. So never get concerned when you miss a trade, because price will always give multiple opportunities. This is a 1 to 6. And then if I had entered over here, this is the midpoint, stop loss just below, add a couple of pips. It's the same trade idea, similar risk reward ratio. This is a 1 to 6. This is a 1 to 6, right? Same idea, same risk reward ratio, but I missed both, unfortunately. And this was the equal lows I was targeting. You can see, price took that liquidity out clean. So that's that. So Euro Swiss franc. Okay, so I had an idea, right? So this was I believe, an order block on the daily time frame. I was expecting price to come to the midpoint. I was going to blindly enter. Unfortunately, price didn't reach it, but we tagged in the order block, and we traded below this green line, which is the area of swing lows I was targeting. So since price took that out and is trading below it, we have now officially created opportunities for us to potentially enter. So this is the 2 hour time frame. So we're going to zoom in to see if there's any zones within this optimal trade entry we are at. So we have to zoom in a little bit. It's moving quite weird. Personally, I don't like this. Although it technically could be an entry, I cannot enter that. It's too messy. Like around this area right here, there's just too much going on. There needs to be like an imbalance of a fair value gap, an order block or something, but there's nothing here. So I wouldn't be able to enter this as a valid trade, unfortunately, though it does look good in terms of context. So Euro USD looks a bit bullish. We was looking for a retracement, but price just boomed up. Let's leave that alone for now. this at all. Okay, let's have a look at this. So we are bearish on this, or bullish rather, on the yen. So we could definitely see a potential for this to be valid. We are in already the 4-hour Fifth Valley Gap. What I would personally be looking for here is confirmation that we're rejecting from it. So we've displaced and we've taken out that swing low. That is enough reason to enter, but we would need a pullback. Into this optimal trade entry right here, and then we can sell down. But within this, I can actually see the Fair Value Gap lines up with just about the equilibrium. So we can enter on this low hanging fruit, but stop loss will have to be above here. Add a couple pips. It'll be like this, and of course we'll be selling it to equilo. So it's about 1 to 7. It's quite similar to the GJ trade in that we expect it to come up here. Now, I did set a limit, and it nearly tagged us in, but it didn't quite. Let me grab USD/JPY. So I'll probably set an alert here as well, or a limit rather. So give me a second to enter that. Hmm, 10 pips. Okay. Come back. All right. As you can see, price is just literally moving. The good thing about this, although it's obviously not ideal that we're not in this move, is that if price was to retrace now, the same entry that we had is now higher up on the optimal trade entry. So technically it's still valid. Okay, let's go from here. USD Swiss franc. We were looking for sales over here. That did not occur. We took out that trade. Yeah, I see why we're entering sales. Well, yeah, we didn't get what we were looking for, which is fine. Let's move on for now. Okay, so we swept buy side liquidity over there. Oh, this might be ready to enter. So from here to here, let's see. So we came off that 1 hour Fair Value Gap. Because we kind of missed that, what I'll be looking for now is for price to pull back. There's a lot of entries for today. So there's an imbalance here. And then the first candlestick is over here. I just said, like, this is order block as well, right? Just say like 21 pips. And then first TP will be over here. GBP NZD. Well, it's another limit to set. Okay, that's been set. There. Ooh, this looks very bearish. How many alerts can I set or limits? Let me check the daily context first. Okay. Oh yeah, we just swept these highs over here. So valid setup. Ooh, hold on. So I need to be done in 10 minutes. Or like 22 minutes max. I don't like it on the smaller time frames. Okay, here we go. 5 minute looks good. Let me see 15 again. Yeah, it would have to be 5. And then, since that's the case, the leg would start from this order block. And we can have, probably just be the order block itself actually, that we use. This is UP Swiss franc. Yep. I had my screen again. Six, 706. 6, 760. Okay. So tough to do on my phone. I wish I had my laptop, my computer even. But here's the thing. It looks like price is already making this move on some of them. Let me just share these ideas. To the Telegram. What was this one? Swiss franc. Or you can kind of see my setup. Hey, yo. Okay, so GBP. Oh, this is my laptop, by the way. Top left, you can kind of see. Excuse me. It's just the battery's so poor. I've literally had it off this whole time too. So I'm just on this bed right now. Okay, so GBP Swiss franc. I don't know if I. Oh, wow. The entry actually changes for this. This is above now. To be fair, the stop loss is pretty much the same, but the entry now gets, our risk order gets reduced. So what we do is change entry to 160,247. Let me update that. I don't know if I even sent that in at all. Okay, I didn't. And then I need to hide the screen so I can actually edit that on my own trade. So I changed my entry to 160,247. Everything else stays the same. Maybe the limit. Wait, we need to change the amount. So it was 10 pips. That was 15 pips, so we need to reduce it by like 80 by 20% maybe. In the meantime, hold on. Okay, so let's use the GPY. I think that's all of them in now. Let me see, GPNCD is the only one I might not have done. Okay, let's get that in. Okay, let's do those four. Let's continue. Done those. Let's go to USD Swiss franc. It's pretty much the same thing. Okay, we'll leave that alone. I'll leave that alone for now. I'll just keep my eye on it. And so I'm moving quickly now. The daily context doesn't suit AUD for sales. I'll leave that alone as well. Oh, we came up to that one area I was looking for. This is why I was never getting involved in those sales. Okay, so here is it's just a watch list. We need to see it. Let's place downwards, so I'll just mark this out for now. That was that. That was EuroCAD. Straight coming to you. This is bearish. Wait, what happened last time we tagged? We didn't actually touch the 4-hour fair value gap. Okay, so we just need for price to do that this time. All right. I'm just going through this one really quickly. Ooh, that could be very good next week. Ooh. We'll leave the rest for now. Okay. Wait, there was one more, right? Was it this? So the contest, we set those highs, displaced downwards, and in the displacement, we traded below that swing low. We pulled back into this area. We traded below again this area. But, oh yeah, I remember this didn't look good for the displacement area, so I'm not a fan. What was these ones again? Yep. Leave that alone. Didn't tag the zone. Missed those trades. Did I miss that one for this? Was this one that was messy? That is indeed messy. Take context again. Because it's not an immediate reaction after the sweep, I'm a bit concerned about this. I'm not too certain. I think USD pairs as well, I want to kind of leave alone for now. Not all of them, but just if it's not clear and obvious, I'm not interested. Okay, so those are my alerts. Post them all on the Telegram. Probably will personally enter most of them. And yeah, if you want to join the Telegram, obviously when I'm not streaming and I want to share, if I want to share ideas, it will be on the Telegram. Link is in the description. We made our first post on Instagram today or Wednesday. This is it over here. It's kind of a little picture for my birthday. And then, yeah, we'll be back tomorrow. This is day 94. It's me, your boy CJ, and I appreciate everybody for tuning in. See you guys later. I won't be live for the New York Open, but I'll probably trade on my phone, as always. That's it for today. Thank you guys for watching. Catch you guys later. Peace.